Now I am going to discuss about fund flow statement. First of all, we have to understand fund. Fund is nothing but working capital. Flow means change. Therefore, fund flow is change in working capital. Fund flow statement measures and presents in an analytical manner the summarized version of the numerous flows of fund for a specified period. Now we will move to the problem preparation of schedule of changes in working capital. The balance sheet of Electricity Limited at the end of 1993 and 1994 are given below. You are required to prepare a schedule of changes in working capital. Liabilities 93-94, asset 93-94. First we will see the liabilities. Share capital is given 1 lakh 1,50,000. Share premium 94,500. General reserve 50,000 and 60,000. Profit loss account 10,000 and 17,000. Debentures 70,000 and 50,000. Provision for depreciation on plant 50,000 and 56,000. Provision for depreciation on furniture 5,000 and 6,000. Provision for taxation 20,000 and 30,000. Creditors 86,000 and 95,000. Then come to the asset side. Land 1 lakh and 1 lakh. Plant at cost 1 lakh 4,000 and 1 lakh. Furniture at cost 7,000, 9,000. Investment at cost 60,000, 80,000. Debtors 30,000 and 70,000. Stock 60,000, 65,000. Cash 30,000 and 45,000. Then liability side total 93, 3,91,000. 94 total is 4,69,000. The same manner asset 93 it is 3,91,000. 94 it is 4,69,000. We are going to prepare the schedule of changes in working capital. Under the schedule of changes in working capital, already we know working capital is nothing but the capital required for day-to-day operation. So working capital comprises of current asset minus current liabilities. When there is increase in current asset, the working capital will increase. When there is a decrease in current asset, the working capital decreases. Again I am repeating the same thing. When current asset increases, working capital increases. When current asset decreases, working capital will decrease, and vice versa. When there is a increase in current liabilities, the working capital will decrease. When there is a decrease in current liabilities, working capital will increase. So in this problem we are going to take a current asset. So current asset are, first we take the debtors. Okay, there is an increase of 40,000. So just put it in the increase column 40,000. Stock, it is 60, 65. 5,000 has been increased. Put it in the increase column. Then cash 30,000 and 45,000. The current asset increased. So 15,000, put it in the increase column. Then we'll come to the current liabilities. Under the current liabilities, we have only creditors. That is 86,000 and 95,000. There is an increase of current liabilities. So automatically the working capital will decrease. It comes around decrease by 9,000. So the total of column of increase column it is 60,000. The decrease column total it is 9,000. The balance amount falls on the decrease column. So we are going to write increase in working capital. The balance amount is 51,000. Then we'll move to the next problem. Second problem. Prepare a schedule of changes in working capital from the following balance sheet. Under the balance sheet we have two sides, liability side and asset side. Liabilities are 98 and 99. Share capital 50,000, 50,000. Debentures 10,000, 20,000. Bills payable 18,000, 6,000. Outstanding expenses 6,000, 9,000. Trade creditors 33,000 and 40,000. Asset side fixed asset 18,000, 28,000. Investment non-trading 10,000, 10,000. Trading 8,000, 9,000. Inventories 12,000, 18,000. Trade debtors 40,000, 48,000. Accrued interest 4,000 and 6,000. Unexpired insurance 99 it is 3,000. Cash at bank 17,000, 2,000. Cash in hand 8,000 and 1,000. Total 98 and liability side and asset side it is 1,17,000. Asset side and liability side total 99 it is 1,25,000. We are going to prepare the schedule of changes in working capital. Under this current asset you have the investment, that is trading. We have 80,000 and 9,000. There is an increase in current asset. So put it in the increase column 1,000 rupees. Inventories it is always called a stock. It is also increased 12,000 to 18,000, 6,000. Then trade debtors it is also increased to 8,000. Accrued interest it is also increased to 2,000. Then unexpired insurance it has been increased to 3,000. Cash at bank it has been decreased by 15,000. Cash in hand it is also decreased by 7,000. Put it in the decrease column. Then we'll come to the current liabilities. Bills payable. First 1998 it is 18,000, 1999 it is 6,000. It has been decreased, so automatically the working capital increased to 12,000 rupees. Outstanding expenses 6,000 and 9,000, and it has been increased to 3,000, so put it in the decrease column. Then we go for the trade creditors 33,000 and 40,000. It is also increased, automatically the working capital decreases. So now just we see the increase column total is 32,000, whereas decrease column it is only 25,000. The balance amount falls in the decrease column, that is 7,000 rupees. That is falls in the decrease column 7,000 rupees. So decrease column it falls. So it is called as increase in working capital 7,000 rupees, sir. Then we'll move to the next problem. You are asked to compile a working capital statement from the following details. 8% debentures 99 it is 40,000, and in 31st December 99 it is 40,000. Outstanding rent 8,000 and 12,000. Cash in hand 4,000, 8,000. Cash at bank 12,000, 15,000. Accounts payable 20,000 and 26,000. Machinery 25,000 and 16,000. Accounts receivable 30,000, 34,000. Then prepaid commission 4,000. Inventories 22,000 and 27,000. Share premium 15,000, 15,000. Equity share capital 50,000 and 50,000. We are going to prepare now working capital statement. We are going to take the current asset. See, first cash in hand, it is 1st January 99 it is 4,000. 31st December 99 it is 8,000. So there is an increase of 4,000. Put it in the increase column. Then cash at bank, it also increased by 3,000 rupees. Put it in the increase column. Accounts receivable, otherwise called as bills receivable, that is also increased to 4,000 rupees. Put it in the increase column. Then prepaid commission, it has been decreased by 4,000 rupees. Put it in the decrease column. Inventories, it has been increased 5,000 rupees. Put it in the increase column. Then we'll move to the current liabilities. Under the current liabilities, we have the outstanding rent. It is 8,000 and 12,000. That is the current liabilities has been increased. Automatically the working capital decreased by 4,000 rupees. Accounts payable 20,000 and 26,000. There is an increase. Automatically there is a decrease in current liability. There is decrease in working capital. So the increase column total is 6,000, 16,000. The decrease column total is 14,000. So the balance amount falls in the decrease column. So you are going to write increase in working capital 2,000 rupees. Next we'll move to the calculation of fund from operation. Under the fund from operation, we are going to take the net profit, add item which decrease the fund. Okay, normally we take the depreciation, loss on sale of asset, goodwill written off, discount on issue of shares, preliminary expense written off, patent written off. Okay, so all these items should be added, and the item should be deducted is profit and sale of asset. Then income tax refund. These are the items should be deducted. We'll get the fund from operation. In this problem, we have to calculate the fund from operation from the following profit and loss account. They given the debit side profit and loss account, expense paid 3 lakhs, depreciation 70,000, loss on sale of machine 4,000, discount 200, goodwill 20,000, net profit 1,15,800. Then credit side gross profit 4,50,000, gain on sale of land 60,000. Altogether both the side 5,10,000. So as already I told, net profit you are going to take 1,15,800. Add item which do not decrease fund from operation but debited to profit loss account. Depreciation 70,000, loss on sale of machine 4,000, goodwill written off 20,000. Add all this amount, it comes around 94,000. Already 1,15,800 we have net profit. Then item which do not decrease the fund 94,000. Add up this amount, it comes around 2,09,800. Then we are going to deduct item which do not increase fund from operation but credited to profit loss account, that is gain on sale of land, that is 60,000. So just deduct from 2,09,800 minus 60,000, we get fund from operation 1,49,800. Next we'll move to the problem fund from operation, the different model. From the following detail, ascertain fund from operation. They given the profit loss account beginning and end. That is 98 it is 50,000, 99 it is 60,000. General reserve 30,000, 40,000. Goodwill 20,000, 12,000. Preliminary expenses 6,000 and 4,000. Depreciation provision accumulated 25,000, 40,000. Income from non-trading investment 98 it is nil, 99 it is 20,000. Preference shares of the face value of rupees 1 lakh were redeemed during the year of at premium 10%. The premium on redemption was charged to profit and loss account. Now we are going to take the opening profit and loss account in the credit side. Buy balance brought down 50,000. Then add the transfer to general reserve difference amount 30,000 minus 40,000, it is 10,000. Then goodwill written off 20,000 in the 98. In the year 99 it is 12,000. The difference amount is 8,000. Then preliminary expenses 6,000 and the amount is 4,000. There is a decrease in 2,000 that should be added. Then depreciation provision 25,000 and 40,000.